Hello and welcome to another update video on Bitcoin. So earlier this week I published a video on X about the parameters for the week. So I promised some updates throughout the week about this. And in that particular video there are a few things I pointed out. Specifically the unfolding downtrend that had started here at the all-time high. Because we saw several 5-wave movements to the downside. We saw a 5-wave decline from the 6th of October high. That can be a first warning that a major top has formed. But we always have to consider the context. So it's not enough yet to really confirm a bear market, because it's just a 5-wave decline. It's just like the first signal that a local trend to the downside is unfolding. But then what we saw afterwards was a 3-wave move up. So that was like, it just told us, look, the bulls cannot easily take the price higher in an impulsive structure. That's just the root of market structure, guys. That's a 3-wave move up, indicates the trend is not clearly up. And so we then saw a 5-wave decline over the weekend happen. No, that was actually last week. We saw that 5-wave decline happen last week. And I think then after the weekend, I published this video that I talked about because we saw a corrective bounce over the weekend. And then, this set out the parameters for this week, where I told you that the third wave should get to the 138% extension. It's just standard guidelines, right? There's no magic crystal ball. It's just standard Fibonacci guidelines. I mean, we pretty much got there. $98,350. The price landed at around 98,700, 98,800. And it landed not only there, very close to that first ideal target for circle 3, it also landed where the 55-week exponential moving average is located. And I mean, not just anywhere there. No, and let me see if I can find it, but exactly there, exactly there. And it's at around 98,700. That's the 55-week EMA. So it landed there, found support. I don't think that's a coincidence. It's a very, very important level, the 55-week EMA. We have seen several rallies unfold from the 55-week EMA in this cycle. Now, I know that some people use the 50-week, and I've received messages about it. I mean, we can add it to the chart, the 50-week. Just need to make sure. It needs to be the SMA, I think, because that's what I received questions about. Let's see how that performs. It's just that I rather use the 55 because a 55-week EMA. And let's change the color to, I don't know, yellow. Make it a little thicker. So you see it's pretty much very similar. It's just that the 55 seems a bit more accurate. Otherwise, it doesn't really make a great difference, as you can see. I just find the 55, it has provided support more often. We had seen reactions to it, whereas the 50 is just a little off. Here they kind of met in April, and then here we broke below the 50, whereas the 55 was touched. Okay, I don't think it makes a great difference. Just that the 55, oh, hold on. I didn't select 55. Okay, hold on, let me just double check. 50, I see even more off. Okay, so here they met in 2024. That didn't make a difference. That didn't make a difference. And here, also here, the 55, though, is a bit more accurate because it wasn't even broken. But you see still the value of the 50 as well, because we're now holding exactly above the 50. Whereas the 55 wasn't broken. The 50 was, but the candle already recovered all the way to. It's quite funny to see. But yeah, it's interesting how these work. Yeah. Hold on, just need to hide this one again. Okay. So it's just something to be aware of. I mean, yeah, the next main one that we can track here is actually the 89. Yeah, that's around 88K. So it's just something to keep in mind. But anyway, again, the 55-week EMA was part of that video that I mentioned, because that's where we talked about, key support levels, and also the June low was mentioned. So we reached that support. Okay, so it's not that, I can foresee the future, but I use standard Fibonacci guidelines to determine the target for the upcoming third wave to the downside. The risk was at least very, very high, and so we reached it. And now, was it yesterday or so? I made an update about the parameters, because obviously now with the price having hit this support cluster down there, including psychological support around 100K, yeah? So I view this as strong support. The question is, what now? Do we need to change anything? We don't need to change anything, but what I've added in that update, I think it was yesterday, was resistance between 101,767 and 104,989. I mean, this is the very first resistance area to watch, the very first one. It's important to understand that really this is the very, very first one. So if we break above it and it's just a corrective bounce, it still doesn't necessarily need to be super bullish. We would then I would then start to look for higher, but would still be very cautious until we get a proper 5-wave move up, followed by a 3-wave pullback. The thing is, there is a bullish scenario, which is the white count, in which a wave 4 might form at any point. It could form a low here at any point, especially given that this is very strong support. That's possible. I don't really believe it at this point. Again, not without evidence. Yeah, a break above resistance is not confirmation that we go to all-time highs. I have to say that very clearly. Not yet. But it keeps the door wide open, of course. But a pullback there in a wave 4 with a complex correction, a WXY structure, it's just a bit speculative. So if we go higher from here, it could be our 5th wave, absolutely. Yeah, that can unfold here. Could be our 5th wave, but it needs to give us some evidence for it, like a proper 5-wave move up and a 3-wave pullback, like a classic 1-2 setup. I think the chances that this happens from this area, maybe even after one more low, they're quite high, that we at least get some sort of a 1-2 setup. But it's not visible yet. We're not breaking below any resistances. No, breaking above any resistances. One more thing. People will ask, okay, what if we break above resistance? Well, then I have to at least remove the yellow count as it is, the impulsive decline. Yeah, the market was oversold. Talked about that. RSI, daily chart. Yeah, okay, not below 30. Ethereum was, by the way, but we found support here at this trend line of the daily RSI. And so this is important because typically from these areas we get a bounce. There was an RSI support as well. So really strong support. So a bit of a bounce is likely here. It happened, yeah. It's just that if we go higher, it doesn't need to be the breakout to the upside. It could just be a more complex, maybe this C wave down unfolds as a diagonal pattern. That would be my alternative scenario. Wave 1, wave 2, then wave 3, 4, 5. So we are also in wave 3, but it doesn't unfold as an impulse. It's like an A, B, C. And so you see, we could go a bit higher and then still come down. It really will depend on how this structure to the upside develops. I will, of course, keep you updated about it. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks so much. Bye-bye.